Hello and welcome to the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Fabi Lara, also known as the Next Big Rush on social media, runs the Next Big Rush site where she communicates daily with her subscribers, looking at the news in the resource sector for things that catch her eye and communicating those to people in the space to help investors catch some of the stories as they're breaking. And Fabi, we were just talking before recording that we first started chatting over at the CEO.ca platform, I think back in 2016 or 2017, when we were all just a young group of investors with the Hedgeless Horseman in there, Nick, the mining book guy, Jay Fire, a nice group of investors looking at the sector when it was kind of in a transition period. And when I think of you, and I've watched you over the years grow in the sector and really mature as far as your knowledge in the sector, I always think of uranium when I think of you, Fabi. And so I thought we'd start there and get your thoughts on a sector, the uranium sector, that's had a big run really since, I would say, the last 4 years. I would say since the pandemic crashed, there was a huge move in 2020 and 2021, a little bit of a cool down in 2022, another big year, the second half of last year in 2023. And then so far in 2024, it's been a wild ride as well. How are you looking at the setup right now in the uranium miners?
Thanks, Shad. Yeah, it's been a while. And so when we talk about uranium, I think we have to understand that it's a little bit of a different market compared to what we're used to, I guess, you and I, the gold, silver, copper, and the usual metals that we love to hate at times. In uranium, you have a very strange dynamic where you have, I guess, two different types of players in the industry. Basically, you have people that are in it to make money. So you have financially incentivized players, you have hedge funds and whatnot. And then you also have the end consumer of uranium for nuclear fuel, which are the utilities. And so within that dynamic, what we're catching right now is the beginning of a new cycle for the utilities to come to the table and replenish their cupboards, and fill them up with material. And because of that, because they have been, so comfortable in their position with buying very, very cheap uranium since Fukushima, which happened in 2011, what you have is that they got too comfortable and they didn't make enough purchases quickly enough. And now they're finding themselves paying way more for material. And financial players have been looking at that for the at least the last 5 to 7 years and signaling to the market like, look, there's an opportunity here to front run the people who need it the most. And so we're still in, I think, the very early stages of that, even though, the equities don't really follow, exactly where the metal is. And just an example, we have gone from $18 per pound to now 95, 94, $95 per pound, which is a great incentive price for the miners to come online and just turn on the taps and produce more. In theory, it looks amazing. But the reality on the ground is that you have most producers, officially saying, like, look, we would love to produce more at these prices. These are excellent incentive prices for us to produce more if only we could. Basically, that's what they're saying. Right. And so they have production issues, they have staffing issues, they have shipping, insurance, war issues, and whatnot. And so we find ourselves in a place that's very interesting because utilities are starting to come to the table. Financial players are making their bets, and a lot of them are, well positioned at this point and obviously taking some profit. That's why we reached, I think, about 107, and now we've come down to about 94, 95. And you have the equities, which act in a completely different manner because the equities topped out in 2021, if I'm not mistaken. And a lot of them have not reached that peak. And so the sentiment hasn't trickled down to the smaller equities in the cycle, which to me indicates that we still have a bit more room to run.
Yeah, I'm really glad that you framed it in that way because it's interesting to see the run that the uranium stocks made in 2020 into 2021. And a lot of them did put in their high water mark at that time. And like we mentioned earlier, corrected down in 2022. There was an uptick last year, but a lot of them are still not back to the levels we saw back in 2021 when I think uranium was more like $50, $60 a pound, as opposed to it was over $100 a pound just a little while back, as you mentioned. So there's a
Yes.
lot of people saying, hey, these equities still have a lot of catch up to do. Do you think that maybe they got too over their skis back in 2021, or is it more of a situation where the spot price moved up so quick that people just haven't digested how much more value these uranium stocks have?
I think it's both. Actually, if you dig deep into, the reports, you will find that what's been happening, I want to say in the last 6 months, don't quote me on this exactly, but I've seen charts and reports on this very recently indicating that retail has been mostly shaken out of the trade at this point, and you have institutional capital coming in at this level, which tells you which companies they're buying in the first place, right? And so what you have is a few larger companies that are either late stage development, close to production, or actual producers. And you have institutions still very much increasing their positions in them, but they're doing it in a way that is very elegant, and they're not, bidding up the price. They're being super patient. And when retail doesn't see that the prices of the commodity underlying the project, isn't being closely followed by the equities, they start to doubt themselves. I think this is natural. I'd be lying if I said that that is not off-putting for myself as a retail investor. If you see the price of gold, go from $2,000 to, I don't know, call it $8,000, you would expect an explosive upward trend on everything that has even gold in its name. That's natural, right? I mean, that's why we're in this game of speculating in the first place. And because the players that are coming in are institutional buyers, the money has not trickled down to, the small caps yet. And so that in and of itself is a reason for a sell-off of precisely these, small cap companies. And at a time when I think historically, this has been one of the worst times for the TSXV, the CSC, pick your poison for, different stock markets where you can find these junior miners, and liquidity and volumes are just dire. They're super dire across the board, uranium, gold, silver, whatever the commodity is. And so it's been a downward cycle that's kind of a, self-fulfilling prophecy.
Well, and I think you bring up a good point too with the fact that we needed to see, and for years this was being discussed in the uranium sector and the nuclear sector, we needed to see the contracting cycle kick off, the longer term offtake agreements, because unlike a lot of other metals where you just see a price per ton or a price per ounce, there's a spot market in uranium and it gives you kind of an indication of where things are going. But the majority of utility companies don't actually buy in the spot markets. They actually buy over long periods of time from offtake agreements with companies. And we just were not seeing that for the longest time because, as you said at the onset, they just got kind of cushy. They got used to being able to always go and grab a little here and there if they needed to, or grab it from a hedge fund that maybe had some on reserves. Now that spot market has mostly dried up because of the Sprott Uranium Trust and Yellow Cake and the Kazakhstan physical trust that they have. And you've also seen about 6 different companies in the space also mop up a lot of the spot market. So there's just not much trading there. But where there is now is finally some of these contracts. So that's good to see. And hopefully these will be longer prices that give these companies longer term value. Are you more attracted to that, the developers and near term producers that can have a little bit of assurance that they're going to get good prices for these pounds in the ground? Or do you like diving down into more of the exploration side and looking for the companies finding the new uranium deposits?
I like to have a little bit of everything, to be completely honest. Portfolio allocation is probably one of the most overlooked aspects of junior mining investing. And I think, for those people who were die-hard late stage development type of investors, they threw all of their cash into Global Atomic, and all of a sudden they found themselves in a situation where there was a coup. don't get me wrong, I'm a shareholder. I absolutely love the story and I'm still holding. I haven't sold a single share. But the reality of it is the late stage developers have proven to find way too many obstacles, even though they're on paper very close to production, right? And so the situation with Kazakhstan, for example, you see that they don't have enough sulfuric acid in order to increase their production. Well, that is one of the issues. The other issue is that they just haven't really drilled enough holes in order to make the most of their ISR. And I would guess that part of the reason why they haven't done it is because the cost of doing that is not zero. And you need to do it, 18 to 24 months before you're able to get to full production. And so there have been mistakes done in the past or overlooked that can't be rectified in the short term. The same goes for the developers because when you look at, at a late stage developer, as much as I love developers, you're looking at an industry where finding a good mine manager means that you have to poach it from somewhere because, they don't make them anymore. It's not like it's a massive industry with lots of different mines all over the globe where you can find good, experienced staff. And so, with gold, with copper, silver, et cetera, you can find people with enough experience that can take a project over the line. With uranium, I mean, it's tough. And so because of like little details like that, the developers, they have been mostly have to push back on their timelines, quite a few times. So if you go back maybe 3 years and you look at all the developers, they were very, very close to production. And most of them are still very, very close to production because of these issues. And so obviously training people from scratch takes a long time. You also have I guess the limitation of, you're dealing with radioactive material, you're dealing with a nuclear themed kind of mine, and nobody likes a mine to begin with close to them, and they don't like, a uranium mine close to them. And so you have all sorts of issues that maybe don't prevent the project from moving forward, but actually delay it enough that you might have to come to the market and dilute. Having said that, yes, I do have exposure to some of them because I believe that eventually, these companies are going to make a lot of money. And most importantly, they're going to be able to contract at much, much better prices than, for instance, Cameco did at the lows of the bear market. Now, between that and new exploration plays, which I absolutely love, especially if they have, something proven already, something high grade already found, and they need to expand on that. There's also something in the middle between those two, which is what's happening to a lot of the US plays. So the US used to be number one uranium camp producer, whatever you want to call it, in the world. And everybody knows where the uranium is in the USA. It's all been delineated. But the industry died in the 80s, the 70s and 80s. And so you have a lot of companies going back to the region, of Wyoming, Utah, Texas, et cetera. And they are reviving it, a lot of ISR projects. So you're not really dealing with is there uranium in the ground? It's very much a game of how much of it and what is the grade and what can you extract it for. And these are usually projects that are easy to get to. So I take a look at this from, the perspective of, yes, I do want developers, but I also want US based plays with pounds in the ground. And yes, I also like exploration plays. So I guess my answer is there is very little I don't like in uranium right now. And there isn't much that is, too overvalued to take a shot, even if it's small.
Okay, so you have a smorgasbord approach where you're going for all of it from producers, developers down to explorers, and you can see opportunities in unique jurisdictions like you were talking about in the US. I'm sure you have some Athabasca Basin plays as well. And
Yeah.
I want to just point out that you don't just do uranium. That's been the focus of this talk for our introduction here on the KE report. But maybe in future episodes, we'll dig into the fact that you do look at gold and silver and copper. And I would love you to take a moment and just unpack your service, what you do for investors, and just tell us a little bit more about how we can find you, Fabi.
Sure, no problem. So yeah, I started with silver and gold. I also really like copper right now, and I look at news every single day. So I scour all the news in the industry, mostly, more Canadian focused. And at the next big rush is where I publish, I guess it's a summary of what happened in mining today. And so every single day I put out, the best press releases in very summary form, very short form. And I want to make sure that, investors like myself understand just the very best of what happened. What are the new discoveries that are happening, M&A activity and things of that nature. And it's absolutely free. So if you want to hop over to thenextbigrush.com and sign up, I can promise you that if you don't like it, you can have your money back.
Well, you can't argue with free 99. That's a nice offer, and we'll put a link to that down below this interview so that if people want to go over and check out Fabi's work, they can just click on the link. It takes you right over to her site. And we definitely appreciate you coming on the KE report, Fabi. I'm sure we'll be talking again down the road, and we'll get into some other topics. But great to have you on just to talk about uranium. It's a pleasure. I can't believe we waited this long to do this episode, but looking forward to having you back on down the road.
No problem, Shad. Thank you so much.